Welcome to the February 2023 Phoenix Metro Area Real Estate Market Update. Well, many of us are very curious about what this year will bring, especially as it relates to interest rates, home prices, and ultimately the overall health of the real estate sector. Well, let's start with the overall health. There are no shortages of headlines designed specifically to terrify, because, well, whether we like it or not, they work. A recent survey from NerdWallet reveals that 67% say a housing market crash is imminent in the next 3 years. That's 2 out of 3 people thinking that the housing market crash is coming. Now, that's not surprising when headlines like these are so prominent. U.S. foreclosure flying surged to 115% in 2022. These are factually true, and they suggest that the market is about to crash. However, it's important to look beyond the headlines and consider the context of the data. So let's look a bit deeper and see if that conclusion is reasonable or if it's simply a tactic to get clicks. According to the year-end 2022 U.S. Foreclosure Market Report by ATTOM, foreclosure writings, default notices, scheduled auctions, and bank repossessions, that is up 115% from 21, but down 34% from 2019. This graph shows U.S. properties with foreclosure filings since 2005. A look at 2017, 18, and 19, it shows that we averaged just under 600,000 foreclosure filings. The last 3 years, we had a very different scenario. We had the forbearance program and higher equity so people could sell their home and avoid foreclosure. The full story is we had record low foreclosures, nowhere near even a normal year. It's not surprising that 67%, or 2 out of 3 people, look back in time and remember what happened when the market crashed. They see the headlines that foreclosures are rising and think, hey, here we go again. In 2010, there were 2.9 million foreclosure filings. And since then, much has changed in the market. Buyers are much more qualified, now have a much better credit history. They have income and debt ratio qualifications that simply weren't in play and that caused the market to crash back then. Regarding interest rates, well, consumers may be adjusting to the fact that the amazing and unheard of record low interest rates, well, they're a thing of the past. Well, what does that mean? The 30-year fixed rate has an impact on buyer demand. Good buyer demand is seen when the rate is in the 6 to 6.5% range, while strong buyer demand returns when the rate is in the high fives. The current interest rate trend and January buyer activity shows good buyer demand starting to come back. What that might mean for the spring market is if interest rates continue to improve, the issue will shift from low buyer demand back to our well-known challenge of low inventory as buyer demand improves, but inventory falls. This shows new listings coming to market each year. In 2020 and 2021, new listings were brought to the market at a much slower rate than 2017, 18, and 19, which kept upward pressure on prices. 2022, new listings started to increase, which slowed price increases that we experienced through 2020 and 21, and then moved to price decreases in 2022. Price is always determined by supply and demand. If listings increase, buyers have more options and pricing pressure is reduced. If demand is affected by, say, a spike in interest rates, pricing is affected accordingly, meaning prices may drop or the rate of appreciation slow down. So what does that mean for 2023? Well, after an increase of new listings in the beginning of 2022, so January through June, new listings began to fall dramatically. December of 2022 ended with 21% fewer new listings coming to the market than the prior year. And a more recent number, January of 2023, new listings are at a lower level than 2020 and 2021. Now, there are several reasons for that. Higher interest rates, certainly. And those that say, we're going to stay where we're at. And those that say, well, we don't want to put our house on the market because we're not sure where we're going to go. And builders have pulled back a little bit and are not building at the pace that they were in previous years. As we go into the spring market, inventory remains restricted. From Mike Simonson at Altos, he says, I'm looking at the latest housing data and I see surprising demand indicators, including home price resiliency and supply staying restricted. And who would have guessed that? Well, if you look at what's happening, the dynamics in the market, there is no flood of inventory and there is no flood of foreclosures. And yes, that is keeping upward pressure on prices and home price resiliency. Well, the spring market will be determined by the number of homes available. And interestingly, big banks, well, they're starting to revise their projections. January 10th, Goldman Sachs forecasted 6.1% in depreciation. Basically, they forecast a loss of 6% in home values. And by January 24th, they adjusted that to 2.6%. Price is always determined by supply and demand. So a question on the table is, have home values hit their bottom? If you look at the major trackers, Case-Shiller, FHFA, Black Knight, CoreLogic, you see that the swift change in June from appreciation to depreciation, with the peak in depreciation sometime around August. These numbers are cumulative and they basically show less depreciation currently than back in August.
And moving into our local numbers here in Arizona, starting with active listings in the under $400,000 price point, we are at 4,889, and that is down from January 13th at 5,308. If you take a look back to November of 2022, you can see that we've been trending downward since then. So although demand is slowly decreasing, so is our supply. In the $400,000 to $600,000 price point, we are seeing a relatively similar pattern. We are currently sitting at 4,869, which is also down from last month's 5,365 and trending downward since November of 2022 as well. So relatively similar in that price point. In the $600,000 to $800,000 price point, we are at 1,194. That is down from last month's 2,010. We've been sitting right around that 2,000 mark in this price point since mid-December. We saw that it came down from about October to December, and we've been staying right around that 2,000 mark. 800,000 to $1 million, we're up just a little bit. We're at 947 compared to last month, 934. And our luxury market seems to be picking up a little bit. In our 1 million and over price category, we're at 1,916. That's up from last month at 1,761 and seems to be trending upward since about mid-December, early January. And moving on to price per square foot. Under $400,000 price point, you can see we were at $247 in May of 2022, and we've been trending downward slightly ever since. Although a little bit of an uptick this month. We went from $212 last month up to $213 this month. And we're seeing a similar trend in the $400,000 to $600,000 price point. It's been trending downward slightly since May of 2022, and then a little bit of an uptick between last month and this month. This month we are at $241 a square foot for this price point. Last month we were at $238. 600,000 to 800,000. We started off at $298 a square foot in May of 2022, came down to $277 last month, and are now at $272 a square foot. 800,000 to $1 million peaked in about April of 2022 at $332 a square foot, came down to about $305 a square foot towards the end of the year, and has been bouncing around between the low threes and $317 a square foot, and is now at $301. And here's a quick look at monthly median sales price. I think this graphic paints a really nice picture of where we were pre-pandemic all the way up to the peak of the market in May of 2022 and where we are today. So we can see that steep decline, that was that downward pressure in prices when interest rates took a hike from May of 2022 all the way through the end of the year. However, that steep decline you see has started to subside a bit. Going back to November through to today, we are seeing less of a steep decline and more of a plateau. Of course, interest rates, buyer demand, and supply will determine where that line goes, and only time and data will tell. So be sure to tune in next month for our March market update so we can see all of the data from February and March and where that line continues to trend. And in the meantime, as always, if you have any questions or would like to see data in a specific location or price point, please don't hesitate to reach out. We would be happy to help. Thanks so much for tuning in, and we'll see you next month.